Hello and welcome back to the NWR Virtual Investor Conference. I'm Andrew Gagan. Great to have your company. Let's join our next company, Cirralto. Its ticker code CRO. It's a transaction service business supplying industries with a broad range of B2B payment services, digital trading software, and integrated solutions. Its competitive advantages deliver customers end-to-end e-invoicing integration, rapid ordering, digital trust, and automated reconciliation. Cirralto supplies its customers a recipe of integrated software to create a vertical market standing operating environment that enables the effective and seamless transfer of data from multiple disparate software systems in one standardized technology solution, such as Spenda Retail. Cirralto has licensing agreements with third-party software vendors that enable it to provide integrated SOE solutions to its customers. Just a reminder, if you'd like to ask questions, do so at the end. You can do that by using the Q&A panel on your screen. Let's now hear from Cirralto Chief Executive, Adrian Float. Adrian.
Thanks, Andrew. As the slide suggests, my name is Adrian Float, and I'm the MD of Cirralto. And I really am really excited to be here today to talk to you about what is a very unique business as we're really setting ourselves sail in the financial services space. I suppose what sets us apart is our ability to blend together applications and software products that act as a vending machine for payments and non-bank lending products. And I suppose over the journey, it's really stood us in good stead to commercialize and layer on our transactional capability through our platform, Spenda. So for 20 years now, we've been building software in the supply chain space. And obviously through COVID, the supply chain's become a far more fluid term that we all understand. And I guess against that supply chain space, that means we've built expertise in the way in which businesses share information, integrate that information, and mobilize information. And how we've sort of gelled that together over the journey is to really bring about a set of software and stand on that capability with a set of software that allows businesses to form transactions, share those transactions with their trading partners, integrate them end to end, and then ultimately either pay them or set them up for payment later. And so that whole financial services piece is really, I suppose, the gel that is allowing us to act like a non-bank lender and act like a bank. But unlike a bank, bring to the table a set of transaction capabilities that allow a business to look at its total cost of doing business, not just the cost of funds. So our vision has really been to fundamentally and forever change the way in which two businesses do business. And against that backdrop, the Spenda platform really is the visualization and incarnation of that, where ultimately what we're doing is connecting trading partners together to exchange content in exactly the same way that WhatsApp connects us to communicate and share voice, video, and text. So it's an exciting space that we're in. And obviously, we've been through an incredible amount of change in the last 12 months. So a year ago, most of you wouldn't have heard of us. We were exactly the same business doing exactly the same things, but we were looking for some critical catalysts to really change the way that we go to market. And really that came about through the back end of last year after an extended amount of work where we signed some merchant on record aggregator agreements with Fiserv and Visa and MasterCard. And those agreements we've then, through the front end of 21, brought to commercial life. We've expanded those business payments capabilities now into non-bank lending with the acquisition of Envigo. And more importantly, we've aligned all of our intellectual property with the acquisition of Establishment. In the last little period of time, we've signed some key agreements with MasterCard and Fresh Supply Co. to really bring us a whole different kind of customer at a different scale. And that's been really exciting for us as a business. Probably the key thing to note is whilst the last 12 months have brought about an incredible amount of change, I think the change that the trajectory that we're on right now is even more significant change in terms of both our revenue, our customer composition, our size, scale, etc., of our operations as a business. So looking at us now, as I said, we've been on a 20-year journey building software, and over that 20 years, we've been in and out of payments, but we've always been true to integration as a service and our application layers that allow us to share data. So we've shared that collective vision for a very long period of time. We've got a team now of roughly about 70 people, which is growing and growing consistently. And that growth is really focused on fleshing out our commercial capabilities, as well as bolstering our technical capabilities and our if you like, our multi-jurisdictional capabilities. We're very much focused on a handful of key markets, whether they be automotive, fashion, food, agri, or pet. The thing which gels those markets together for us is the high volume of consumables, if you like, in those transactions. So meaning people are transacting on them all the time, and more transactions means more moving parts, which means more opportunity for us to really harmonize together those markets and vertically integrate them around the goal of getting paid faster or better shaping our cash flow. Against that backdrop, we've got a market cap of around 184, 185 million, with about 3 billion shares on issue. And I suppose we've been able to achieve that market cap as a composite of being in the right place at the right time with the right partners and the right commercial objectives that have allowed us to deliver 6 quarters of double-digit growth to June, and now really having that sort of launch pad to go forward far more aggressively as we run into Christmas and set up 2022. So just looking at our product set, obviously having built product for 20 years, we've commercialized a variety of solutions and gone to market through distribution, through direct sales, channel sales, etc. And really those products in and of themselves have been almost like a training day for our core team to build those core sets. So now as we stand, we would really put our products into 4 key buckets. So the first buckets really are around helping a business to sell better. So that's our point of sale offering, e-commerce offering, our retail payment services, etc. And then moving how they procure, that's where our byproduct comes into play. And then focusing on finance, we've got Spenda Collect and Spenda Pay, picking up each end of the trading cycle. So Spenda Pay focused on helping businesses to manage their accounts payable, and Spenda Collect helping businesses to manage their accounts receivable. And unlike other players, they actually connect in the middle through our integration framework. And obviously with the acquisition of Invigo, we are materially focused on allowing customers to access debt through those various mechanisms, if you like, and unlocking the potential of what we call point of activity debt or point of activity non-bank lending. So where we're at right now and moving forwards, we're heavily focused on growing out areas of our market capability with a couple of key pieces, which ultimately focus on harmonizing together what we'll call the quote to pay framework, which is all the transactions that happen before there is a payment. So as I say, unlike a traditional financial service provider, we sit right up to the start of the process, from how a quote is raised all the way through to that first invoice, etc. And that connection of sale to procurement is allowing us to really encircle a business with a financial services capability and liquefy more of that market. And I suppose that probably speaks to why one of our critical challenges at the moment is meeting our debt warehouse needs, which at the moment, where our demand is massively being outstripped by our capacity to supply, because as I say, we've got the right transaction set in the right markets where we're able to move money efficiently and utilize our payment services to either issue or funds to merchants or suppliers, as well as help them then collect those in an automated fashion in the future. So just looking at how that's being applied and what does our strategy look like. So from a wholesale distributor manufacturer end, we're really focusing on our Spenda Collect product, which is fundamentally, as I say, about helping our customers to get paid what they're owed. Now that could be allowing customers to basically harmonize together all the payment services that would normally exist, from credit card on the website to your bill presentment platforms, to account or EFT payments. And as I say, with the acquisition of Invigo, the capacity to access debt or a pay later service into a single platform, which allows the distributor to bring forward cash flow, if you like, but at the same time, also offer extended terms out to their customer base. So we're really hitting those key issues inside that bottom end of the market with, payment flexibility, debt collection, liquidity, integration. And unlike a financial services business incumbent focused on just the price of money, we're able to help a business understand the total cost of debt administration and really value the integration outcomes and the reconciliation outcomes and business improvements we're able to deliver. As I say, our platform works on an invitation structure. So the goal for us is to help what we call a node invite their trading partner to trade with them and pay them on whatever rails or framework they feel is appropriate. And then in the retail end, we're really focused on, once we've acquired that customer, doing exactly the same thing, but upgrading that trading partner to other products within our range that are really very sticky in assisting that customer to keep doing business. So we're offering payment services, utilizing our retail products as that vending machine for the transaction and connecting into the consumer. And then ultimately, our consumer play really sits around our wallet strategy, which allows anything from pay at table to quote acceptance, and then debt administration all the way through that life cycle. So unlike other players, we really do go top to bottom across the value chain. So looking at our market fit, there isn't many industries that would say, no, I don't want any more money. I suppose the key for us in looking at our core strategy has been to build a software solution that we can pivot around funding and payment services, and then fan out the rest of our applications. So from a business to business perspective, Spenda is very much in the middle of core trading relationships. And I suppose because we're integrating those transactions from end to end, we're actually allowing, if you like, the key presses of the buyer to impact the systems of the seller and vice versa. So my purchase order becomes your sales order, my purchase invoice becomes, my sales invoice becomes your purchase invoice, and we're sharing that ledger connectivity and really saving on the, if you like, the administrative burden across the business. The key thing there is, as we're layering revenue on and building, if you like, a total solution for a business, we're allowing our customer to save money too. So just to unpack that a little bit more, obviously one of the key things for us, and some of you may have heard of the term agile software development or the OODA loop. For us, we're really focused on being an agile business. And as an agile business, what it really means is we've got a very effective rhythm from the way in which we develop our product to the way that we release it, to the way that our sales and implementation teams actually engage out in the market. And we run very structured quarterly plans and break those down into critical goals. But at the heart of that goal in terms of our customer acquisition is really our node spoke strategy, which is super familiar ground to me. It's very much how EDI networks are rolled out, where large buyers implement an EDI strategy and then push that out into their supply base and allow themselves to gain all those core benefits. The difference between us and those traditional models is we allow each end of the trading cycle to gain benefit. Now, looking forwards, at the moment, we're focused on acquiring just simple nodes. And a node to us is a business that's got more than 1,000 trading partners. And as we acquire those nodes with the Spenda Collect product, we really are aligning the objective of that business to our own objectives to acquire more customers. So we want to onboard our customer and help them get paid. Now, in terms of that flywheel effect, of that viral effect, our internal goals are only sitting at around 5% acquisition out of that spoke layer, if you like, or the customer's customer, or 50 acquisitions per node. Now, for us, what that really means is that we're bolting on more and more customers more progressively. And what we're seeing practically in market is 5% is a very conservative objective in terms of our ability to attract our customer to trade with us. Hence the need for us to establish our debt warehouse and much more aggressively be able to liquefy markets and provide much needed capital either to extend the terms of the buyer or alternatively bring forwards the debt that's currently sitting on the balance sheet of the supplier to immediate term cash, and then operate in the middle so we can actually balance those markets out and create liquidity and payment services. So just looking at where we're sitting, as I said before, we're very much focused on automotive, food service, pet, and fashion. Areas that really, for us as people, are things that we obviously want to keep our car on the road, we'd like to eat. Majority of us have a pet, and obviously, aside from in COVID times, we prefer to wear more than just our pajamas and Uggs. So all those key markets all have many players, lots of moving parts, and present a great opportunity. But in more recent times, we've announced a keen and sharp focus on food production and primary production. And we see that really underpinning some substantial transactions as we move forwards in both wine, alcohol, livestock, grains, fruit and vegetables. Agri is a massive opportunity for us. We've obviously announced recent transactions with Fresh Supply and MasterCard as resellers of our products. And those agreements are already bringing wins in this space where we've got a keen pedigree with two of our directors having a long tail experience in the agri space. So I suppose as we keep moving forwards, we'll keep unpacking primary production opportunities and expanding that market segment, and then feeding off that into, if you like, the downstream industries where we can obviously also provide services and leverage that structured invitation or referral process to grow our customer base. I suppose the final thing I just want to leave you with before we take any questions is from a core business perspective. As I say, we've got a product set which spans all the key ingredients to be an extremely effective vendor of both payments and non-bank lending or cash flow products. And that really comes from our platform, which connects the last mile and facilitates end-to-end data exchange around both for anything from, I feel like, any of the business events that occur before there is a payment or a debt action. So from a product perspective, we've got a compelling technology stack, which is suitable for many markets. Against that, I suppose our recent transformation and our continuing transformation means that we're building on our strong core team with the capacity to attract talent from organizations who, if you like, have been through that growth journey. So we've got recent hires with senior people out of, say, Xero or PayPal, where we're bringing them to the table to really complement our existing team and really grow and focus on our culture of innovation and, if you like, just being the unreasonable man, looking at the way in which something happens and saying, how could we do this better? And we believe we've been able to balance our team really successfully against a capital structure now where we've got no debt, we've got a growing revenue line, and we've got $21.5 million in cash at bank, which is obviously a fantastic spot for us to be in and is giving us the opportunity to take choices to grow very systematically and build resilience into our financial metrics that won't just stand us in good stead and give us a bump in this quarter or next quarter, but take us through for years to come. And without further ado, I'm happy to take questions.
All right, Adrian, thanks so much for that presentation. Let's go to some questions. You just mentioned there, $21.5 million in cash reserves. Dean wants to know, what's your plan for that cash?
What's my plan for that cash? Well, at the moment, we're making key investments in terms of being able to expand out other synergistic competencies. We're also looking for opportunities to acquire customer sets where we can roll out our product framework over the top. So that cash is really the scaffolding for our growth. We really don't want to use it for cornerstoning any further lending plans. But as I say that, so looking at it, we see it really being the operational cash flow or cash backing that we need to really build out the core operations, which fundamentally we feel are almost there, and certainly by the end of this year we'll be there. Everything going forwards now is really around how can we match our demand with our supply capacity. So, yeah.
All right. And another question there from Dean: what kind of revenue do you expect from that partnership with Fresh Supply?
It's a bit of a tough question. How can I answer that without going off and causing myself a regulatory problem? What I will say is that there is little point in players like Fresh Supply or MasterCard entering into agreements with us for us to throw off revenues that are, modest. The intent of those agreements is for big swings at the market to capture large amounts of market share. Looking at the way we're establishing our debt warehouse, we've obviously, it's a incredibly exciting problem to have, and we've gone to a few large firms and sort of gone through and unpacked some of our strategy and our current business, and sort of said, guys, we've got to establish our debt warehouse. We've got to establish it now. And I did have one guy from a big four firm say, you're not looking for a debt warehouse, you're looking for the debt Red Sea. So yeah, I guess without putting material numbers on it, the reality of it is that the purpose of those agreements is, from our perspective, to unpack what is an enormous opportunity in B2B payments and point of activity debt services. And we would expect Fresh Supply to deliver some substantial wins for us as we move into the future.
Yeah, further to that, in fact, Reece wanted to know when you're likely to have an update on that revenue from both MasterCard and SupplyCo in terms of those referral agreements.
Well, in the not too distant future would be the short answer to that. We're obviously working away, as you do with any of these agreements. We've got some really good early signs, and we would expect to unpack those in line with our regulatory obligations. Yeah, certainly it's within this quarter we would expect to need to be providing further updates and guidance around that.
All right. Adrian, a question from Mac. Are there any plans to list in the US?
Been asked that a few times. Look, I suppose at the moment, I would say it's a discussion that we have had as maybe a key part of our future strategy. But at the moment, what we're really trying to do is consolidate Australia, really utilize it as I suppose many overseas companies do, as a fantastic place to prove up our capability, build tempo and scale into our release cycle. So, as we, if you like, release features, the rubber hits the road, and we've got customers backed up behind that, and clear revenue metrics, so that when we're making announcements, we're more making announcements around, we're unpacking this feature, this has this addressable market, and this is what we expect to achieve from it. So against the US, that's obviously a plan for the future, but not for today. Okay.
And Chris wanted to know a little more detail on that debt warehouse initiative that you mentioned there, how it's structured, what it does, how it helps, and likely partners.
I probably can't tell you the likely partners. That would be a breach of confidentiality. But, well, ultimately, the easiest way I can describe it to you is we've got a capability to offer. So I'll use an example to illustrate my point. So I'm a marketplace allowing two businesses to trade together. And inside that marketplace, I typically have cash on order terms. Our platform allows for the deployment of a widget to the checkout that allows for the customer to get, say, 30-day terms from invoice. And under the covers, what that's doing is funding the merchant and then setting up a variable direct debit on the customer for transaction plus 30 days. And we're just going to pull those funds and manage the loan book like that. So against that, the debt warehouse is really about being able to liquefy that kind of market, but it's really being spliced up into a number of segments. So I'll call it purpose-built segments of funding. So it's a different kind of lending profile for, say, trade finance versus lines of credit, or the agri deals are different again. So we see ourselves having quite a diversified but balanced sort of debt portfolio, and utilize different kinds of frameworks to really administer the debt. And whether that's, transactions going over the card rails or transactions going account to account, that's very much about the segment in which the debt's being offered. But as I say, we'll make further announcements around our debt warehouse as the plan becomes a reality.
Okay, Adrian, and just in reference to your MasterCard partnership there, Byron wanted to know, given that MasterCard have been promoting their move to revolutionise the B2B segment lately with their MasterCard track system, how or are you involved in that?
There's confidentiality provisions in our agreement that probably make it difficult for me to answer that question. Suffice to say, we see the same opportunity that they see in terms of B2B payments, and maybe watch the media over the coming week or so.
All right, watch this space. Adrian, thanks so much for your presentation. Thanks for joining us from Cirralto.
Thanks so much. Cheers.